Hello everyone, welcome back to Just Invest Today. And in today, we're talking about Alibaba, JD.com, and Tencent because it's almost the end of the year. It's been a crazy year for Chinese stocks. We had this huge stimulus uptrend and then this crazy downtrend again. So we had this mini bull run and then this crazy stock market crash because it's been 10% or more, especially for the Hong Kong index. It's been around 14%. For KWEB, it's been around 20% plus. These are actually market crashes. And when you compare it to the US, just today it was down like 4% and everyone's crying. Oh my God, the S&P, everything is selling off. We are used to this if you own Chinese stocks. This video, we're gonna talk about everything China and what we see in the market and what we can see kind of going into 2025 when we hold Alibaba, JD.com, and Tencent as our main stocks that are going to be controlling our portfolio. So let's get into the video. So when we look back on this year for Chinese companies, I'm actually shocked that the Hang Seng is actually up 20% year to date and KWEB's up 12% because this year felt so bad for Chinese companies. Man, nothing in the market was giving Chinese companies a break because we understand the whole scope of the macro picture. You have Biden keep blacklisting companies all year. We have the whole macro picture of just everyone hating Chinese stocks. We still had the whole Taiwan war going on throughout the whole year. It was actually shocking that the Hang Seng is actually up 20% year to date. And that's all because of what the government's been doing and everything the government has been saying. The Chinese government has been promising so much stimulus into the market, which kind of gives everyone in the US kind of like that essence of being able to get back into the market because the stimulus should seep into the economy and into these companies eventually, maybe next year, maybe the year after, but it gives people that confidence to invest. That's why we had people like David Tepper upping his positions in a lot of Chinese companies. He came out this year talking about how he's very bullish on Chinese companies. They have Michael Burry going all in China. So they have that kind of confidence because of what the government is saying and the government is backing up these companies. So with that backing of the Chinese government, I'm hoping 2025 is amazing for these companies, and it should be because we also have Trump getting into office talking about he wants to work with Xi Jinping. So this should have been more positive and more in the news. It hasn't really shined yet because we haven't seen any developments in this section. But if we see major cooperation between China and the US, especially on this whole tariff talk, this can make Chinese companies run another 10-15% in just a couple weeks, in my opinion. So we really have to look about what's going to happen in that sphere because it could come back and bite us if Trump is really going to put all these 50% tariffs on all these products, especially because our biggest position is Baba, which is all about e-commerce, and that has a lot of international play in it. And this is only important for the short term because China has been suffering from major people just exiting the market. It's the worst it's ever been. Everyone is selling their Chinese stocks and just getting out of the market, investing all of that into the US market, especially the S&P 500 because the S&P 500 has been doing so good this year. The S&P 500 is in this weird particular place. The S&P is around a 25 to 28 PE. And usually the average PE for the S&P 500 is around 17, 18. So the forward returns for the S&P 500 after the S&P 500 has been at this average hasn't been good for the next 5 years, maybe 5 or 8%. Do we see a big shift more into international markets like China, maybe Japan? I don't know, just other markets because the S&P 500 is at such a high place. It can't just keep going up and up and up. So where are people going to put their money if they're not going to see returns in the S&P 500? Maybe China, especially if they have good relations with Trump, because China is at one of its cheapest multiples, especially when you have companies like Baba that I own selling at a forward PE under 10. You have JD.com selling at a forward PE under 6, which is just insane. These companies are buying back shares. This year, China has a record of buying back its own stock, its own shares. So we are actually enthusiastic about what China is doing with the money that they have in these companies because look at Baba. They have around 25% net market cap just in cash. They're using a lot of that money to just buy back their own stock. They're issuing bonds, buying back their own stock. We see that with JD.com. We see that with a lot of Chinese companies low key, but people are not really looking at that. But they are buying back a lot of stock. So if we have the patience to wait 5 to 10 years of these companies just buying back 5%, 6% a year, 7% a year, that actually accumulates over time, and we can see them buying back like 60, 70, 80% of the company in the next 6, 7, 8 years if the stock prices continue at these record lows. So that's a huge positive for the Chinese companies. Going into 2025, I personally believe that you should be looking at the main companies in China, companies that are doing a lot of buybacks or issuing out dividends, that are stable companies continuing to grow, because that's what we're gonna have to rely on, because we are not gonna rely on the market kind of re-rating our companies, because that hasn't been shown to happen in the last like 2, 3 years, especially after the crackdown, and people are always gonna be worried about China and Xi Jinping and if they're gonna steal your shares. So we cannot rely on that no more, on the multiple expanding. We have to rely on companies buying back their own shares, issuing out dividends, and just continuing the growth trajectory of their company. That's why I like companies like Baba, Tencent, and JD.com, because they have a stable market position. Even though they're kind of going through headwinds, right now I think the government is actually trying to do everything in its power to grow the economy. I'm still very bullish on these three companies. I have a lot of more Chinese companies that I can talk about that actually generated a lot of returns for me this year, which I might get into. But for now, guys, I think 2025 should be a good time to buy Chinese companies, especially if you're in the main companies with competitive advantages. Like we have Tencent, JD.com, we have like Baba, we have like Mao Tai, we have Yum China, like NetEase, like those type of companies are pretty solid if you want to invest in China. So guys, what do you think about this video? Like it and subscribe to my channel. Peace.